What up? Today is 19th of January, and I want to recap the trade that I took last week. And let's talk about the trade that I took on Monday, 12th of January 2026. And on Monday, I took a pretty good trade, and it was a winning trade for me. And I want to recap and then to kind of like study the market, right? So, when I look at the chart, I would say I came to the chart somewhere around 9 p.m. Hong Kong time. And then when I look at it, right, it's a big up, big down, big confusion. Obviously, trading range. So, what is the strategy for trading in the trading range, right? So, we buy low, sell high, and scalp. So, when I came to chart, I see, okay, probably I want to buy at the low of the trailing range and sell at the high of the trailing range, preferably with a high to buy setup at the bottom of the range and then low to sell setup at the top of the range, right? It will be better. Or even a wedge top at the top of the range or wedge bottom at the bottom of the range, right? So it will be the perfect example for taking a high probability trade. Not high probability trade, but taking a good trade, right? Yeah. And then when I came to chart and then price, pushing up, I cannot make any decision because at that time it's already pretty bullish in the middle of the range. I do not want to enter any position. And this one big bull bar, I do not want to enter it as well. As we are in the trading range, I want to sell high, buy low, that's it. And then bear bar, do not do anything. Bull bar, you can see that long wick to the bottom and and a lot of bar basically was overlapping each other. So basically it's a trading range, right? And then bear bar, bull bar, long wick to the top, bull bar, and then bull bar, right? So at that time, I want to sell at the high, right? But the next bar is bear, but it's relatively weak setup, right? It's reasonable short below here, but at the time I was thinking that probably I want to wait for another low to sell setup instead of like just sell below here because I have the feeling that probably it will have a pretty high chance that it will hit my stop, right? Maybe it will wind up a little bit higher and then reverse and it will hit my stop. So I do not want to sell below here. And I just wait for one, two, three more bar for better confirmation. And then next bar really break below this low and then break below this low and then um it will activate my trade, but I didn't put my stop here because I think it's a low probability trade. But it's a reasonable trade as we have a pretty positive risk reward ratio, right? And then we have a bull bar, but we have a long wick to the top, right? And then at the time we have to be careful that it probably will be the third pushes up of the bull trend, right? So we have to be extremely careful. And then this bull bar is a breakout. And then the next bar is a follow through bar, but I didn't enter buy because one, two, three, you can see that it's a wedge. It's a wedge top, and then 80% of the time breakout of the trading range will not be successful. So I'm not looking for a buy and I'll stick to my initial idea, only look for sell at the top of the range. And this bear bar, I do not want to sell below here because we have one, two, three, four consecutive bull bar. Probably we will have a second leg up. Selling below here is a low probability trade. And then next bar is bear, but we have long wick to the bottom, trading range price session, weak bear bar. So bear is still did not in control at that time, right? And then we have a doji bar, doji bull bar, meaning that bear and bull is pretty much relatively pretty much like equally strong, and then market cannot decide whether they want to move up or move down, right? So and the next bar is bullish bar, right? And then there's a bull bar, and then I'll say buy above here is reasonable, but at the time my whole idea is only look for sell, right? Because it's a trend range, breakout of the trend range is less likely, and I do not want to look for any buy opportunity. I just want to look for sell setup right at the time. I'll say buying above here uh maybe makes sense, but I didn't buy here. You can see buying above here makes sense if I basically risk 1 to 2 risk ratio. Yep, but I didn't buy there. So I say buying above here makes sense as is a breakout test of this high, but I didn't buy there, right? But definitely going to exit at break even when I saw this spot, right? This is perfectly nested wedge, right? One, two, three, and then complex top, high L, high, double top, and then this is a wedge top as well. Definitely going to exit everything after this spot, right? And the next spot there, then it's a very good opportunity for sell as we have a nested wedge, high, double top, three consecutive bear bar, probably we will have a measure move down, just amazing. And then this bar is a give up bar, basically meaning that those will really give up. And then tightening 1 to 2 risk reward ratio or measure move down, 2 times of the measure move down is here, 2 times of the measure move down is here. So that's the whole trade idea for Monday. And then you can see that I took a pretty good trade. I entered my trade here. Once price break below here, I put my stop above here. And then boom, 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 boom. It reached my take profit. I even have a high risk reward rate. And then basically I'm risking here. And then I got yeah, 1 to 2.5 risk reward ratio. So it's an amazing trade idea. And yeah, I handled pretty well on Monday and I can trade pretty calmly and then just follow my plan, right? It's a reasonable short below here, but it's no probability. Have to be extremely cautious when we have a breakout of a trailing range as price already maybe the third push of the trend, and it will be there may be a possible reversal, and then it's reasonable buy above here as well. Put my stop here and targeting 1 to 2 risk reward ratio, but have to get out everything below this bar as we have a complex top and then much top as well. And yeah, so it's reasonable to get out everything below the bear bar and then even took a short entry and then short below here makes sense, right? It's a giver bar and then targeting to the time of the measure move. So basically that's the trade idea for that day. What up, everybody? Let's talk about the trade I took on Tuesday, 13th of January 2026. And let's talk about the trade I took. And then I took one amazing trade and then just took two dumb trade afterward, right? One amazing trade, break even trade, dumb trade, dumb trade. Let's talk about the trade I took. At the time when I in front of the chart, I see okay, we're in the trend range, and I probably want to buy low, sell high, and scalp, right? And then when I saw this, I probably will not buy above this bar because it have a very high chance that it will break below this low and then continue pushing down, right? Because when you have amazing risk reward, then you have to pay for it, which is probability. You will have a very low probability, and then we have the next bear bar, and then we have a solid bull bar, right? And then I enter the high of the bar, targeting 1 to 2 risk reward ratio, targeting 1 to 2 risk reward ratio, roughly at the range top. So it's a reasonable trade. The trade equation makes sense. So I just execute the trade, and then you can see that boom, 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 boom. Amazing trade, a consecutive bull bar, and I took profit at the high of the range, right? So it's a amazing trade, very easy, very straightforward trade. And then the next bar is bear bar. It's good. Probably will not reverse, not probably. The chance is this small bear bar, there's a lot of people will buy below the bear bar instead of sell below it, right? So you can see that the next bar, those trader will place limit order below the low instead of place a sell stop order sell below the low. And then we have the next bull bar, and then we have the bear bar again. And this is the first time that we try to um, break below this tight bolt channel. But the first reversal down probably will fail and will be bought. And then there's probably will be more buyer below instead of seller as well, right? And then we have the strongest bull bar late in the bull trend. This is 14 bar. I would say we have a stronger bull bar a little late. Only 11 bar. So I think it's still a climatic move, but the chance is we will have a major move up, right? We'll have a 60% chance that we will have a continue pushing up, at least to retest this high with this one bull bar and with the bull trend that's so strong, right? And then the next bar is a weak doji bar. The next bar is a bull bar, and then the next bar is a bear doji bar. Still in a bull trend as long as price is holding above the slope, right? And this is our bear bar. Will I want to sell below here? Probably not, because we are still in a bull trend and the premises is correct. As long as prices stay above this low, then I'll say we should be still in the trade, right? Bear bar, weak bear bar, and then we will have weak doji bar, bull bar, and then we have a bear bar. I'll say it's reasonable for you to short below to exit your buy at break even below this low because it may be potential double top, and then you may want to wait for some pullback and then buy at probably maybe the 20 EMA. But you have to get in the trade as long as the premises is correct if you exit your trade early, right? You can exit your trade based on this double top as you do not want to risk much, right? And then you do not want to take this large risk, and then you can definitely exit out your position below this bar, but you can see that price didn't break below there, and then still fine, right? And then wait for price to reach the measurement target, right? And then price didn't, and then I would say it's definitely a great idea to exit below here because we have a bull breakout, bear follow through, probably we are in a bull leg in the trend range, and then the strain of the bullish move is obviously you can see that it's decreasing, and then I would say it's reasonable to take exit below this bear bar, and then you can see that I indeed exit below this bear bar at break even. And the next bar is still bull doji bar, and then we have a one big bar, reach the measure move target, but definitely we can see that we have the third push up 1, 2, 3, and then the next bar is also a bull bar as well, and we have like kind of like the biggest bull bar late in the bull trend, not the biggest, but definitely you can see that it's still a climatic move. And then the next bar is bear bar, right? So I say aggressive bear can definitely sell below this low, targeting 1 to 2 risk reward ratio. I'll say it's reasonable as the bear bar is strong enough, and then close below this low of the previous bar, and then it's an engulfing bear candle, and then we are at the measure move target, resistance, also range high as well. So I think everything makes sense. At least there's 40% chance that we will retest this low, the start of the bull leg up, right? So that's my whole idea. I'll say it's reasonable short below there, and at the time I have the same idea as well, but I didn't. But I canceled my stop order after I saw the next bar is a bull bar. I should still keep my stop order, then I will win a lot of money. But either what it is, it's still a learning experience for me. I would say, definitely have to be careful when there's a third push, and then you can see the kind of like another climatic move. So it's reasonable short below the spare bar, especially we're at a measure move target and also resistant, right? So just make perfect sense. And then you can see that bull bar, and then another big bear bar close on the slow as well. And then I made a very silly mistake here. I should try to short below here, but big up, big down, big confusion. Probably we're in the trend range and I'm selling at the low of the trend range. So I got trapped. You can see that I'm selling here. Maybe I should, should not do that. Not maybe, I definitely should not do that. And yeah, it's just very dumb and stupid trade. And then next bull bar, bear bar, bull bar, and I know I made a mistake. And then I just exit everything there, and then I become a little bit emotional. You can see that. Oh, no, not emotional. Yeah, no emotion. I only take three trade, one winning trade, one winning trade, one losses there, and then one dumb trade here. The swap. So one buy, one sell, one buy, one sell, one sell, one buy. Yeah, I took three trade in total. But yeah, you can see that one trade, very good trade. This trade I would say is a reasonable break-even trade, but really should not sell at the low of the trend range, break up, break down, big confusion, and then yeah, just selling at the low of the possible trend range, right? Big up, big down. And I say I missed the trade and I become a little bit emotion and FOMO, trying to sell at the low, but I should indeed sell below here, right? So that's the whole idea. And was it reasonable for me to 1 to 1 watch top, sell below here makes sense. Just sell below there, and then yep, I'm gonna post the video. What up? Let's talk about the trade that I took, right? So the trade that I took on this day is very simple as well. Trade range price session, buy low, sell high, and scalp. I don't know how many times I speak about it, but very easy trade and price session. This is bear bar, but we can see that bear bar become weaker and weaker. I think this is definitely a bit aggressive. It would be better or high probability to wait for some second high to buy setup, right? So you can see that I enter right after price just break above this weak bear bar, and then I'll say initially I put my stop all the way down there, right? So that's my initial trade idea. Because I'm thinking, okay, we are probably will fail to break below this zone, and then we have a weak bear bar. I will say buy the reversal up at the bottom of the range. I think this make perfect sense to me. And I would say buying above this bull bar would be a lot higher probability because it's high to buy setup with a decent bull body side, and then we can target something like that 1 to 2 result ratio. It's definitely high probability trade. Not high probability trade, definitely it's reasonable trade. And with 40% win rate, 1 to 2 result ratio, man, you will be good, right? So that's the whole idea. And then just, that's it. I secured my trade here because I'm thinking, okay, this is first time price trying to reverse down, and this second time probably I want to exit below this bar. But when I look back, I think it will be better to stick to my 1 to 2 risk reward ratio, and then to will be a little bit better. I would say, just hit my target and then top of the range, right? So it will be a lot more better, and we'll have a higher expectancy as well. You can see the price just reverse at 4220, right, on the dot. So we can see how amazing it is, right? So yeah, yeah, that's the trade recap for 15th of January. Very easy, simple trade. Trend range price session, buy low, buy reversal up, and sell reversal down. And then weak bear bar, buy above there. It's a very aggressive trade. So I'm expecting I will lose this trade. But the second trade is a bit higher probability and higher, but lower risk reward. You can see that, right? So it's a trade-off between probability and risk reward. So I'm going to pause the video and then gonna not bad test, gonna recap 16th of January, which I lose a lot of money on that day, right? So yeah. Well, I took a huge losses on this day. Basically, it's 16th of January 2026, but I still learn a lot as well. We can see, look at my structure. We're in a training range. You can see that we're within the training range in a large training range, right? So basically, that's what happened. So the trade idea basically simple: buy low, sell high, and scalp. That's the trade idea, right? I'll say selling below this bear bar is reasonable because this kind of like top of the training range, right? You can see that we're really in a very, very tight training range within training range, right? So we're in the top of the training range, and then but when I sell here, I basically want to use a lower risk because there's very high probability that price will come back and then break above this high risk. I would say the great short will be one tick below or one pip below this bear bar, and then it didn't execute the sell, and then it closed something bear like this, right? This is like kind of like a watch top, right? 1, 2, 3, right? Watch top, training range, I think is a very good setup. If this bear bar is a little bit bigger, close below this low, I would say I definitely would take a short there, put my stop above here, right? And then the next bar, very strong bear. I would say at that time, it's reasonable to take a short, even though it may seem like we're selling in the middle of the training range, but in a larger training range, you can see that right over here, it makes perfect sense to go for at least 1 to 1 risk ratio, right? I think it makes sense, right? This is a strong breakout trade at the top of the training range, right? So for me, this kind of trade, I would say makes sense. We're still considered as the top of the training range if we consider the training range to be somewhere around here, right? So that's my whole idea. If I look at the trade in hindsight, right, there's a breakout above this uh channel as well. So in hindsight, I think this trade definitely makes sense to me. Shorting below here, you can see amazing follow through, amazing short as well. And I'm make a very huge mistake. And I'm thinking, okay, we finally break below this trailing low, and then I'm probably gonna sell below this bar, right? Sell below this low, and then man, I made a huge mistake. As price at that time when we look at it, we can see that from this leg to this leg, we are I'll say here to here, roughly 50% pullback, roughly 15% pullback, and then also selling at the low involve very high risk. Do I really want to do that? Because I probably risking freaking 800 pip for that trade. I think it's not reasonable at that time, right? And I'm using a bit higher loss out here as well compared to the big stop loss, right? So selling at the low and also 50% pullback when the price already moved a lot, I don't think it's a solid idea. And then I just get pullback and then I just exit my trade there. Just very terrible trade, right? So I'll say I should short below here, put my stop over there, and then if I miss the trade, then I miss the trade. Every single time when I want to chase low, especially when price already move a lot, I always will end up in some delicate situation, right? I should probably sell below here. Here would be the best instead of here, right? So it's a weak bottom reversal. So I lose a lot of money this day. So it's a document purpose and recap, right? So probably should not sell at the lowest 800 pip stop loss, right? Which is amazing, which is insane to me, right? 800 pip stop loss, and then I'll say the best sell will probably below here. Put my stop over there will be the best amazing trade that I took. And man, just terrible trade that I took on that day, and I lose quite a lot as well. But overall, this is my wait a minute, wait a minute. This is my FTM account, and overall, I'm still in profit. And yeah, and this is my fifth payout on my FTM journey, right? So everything is good, and I'm gonna call it a reflection day. Well, let's talk about the trade that I took on this day, right? Let's talk about the trade that I took. So basically, I took a buy, and then you can see that took a losing trade here on the short, and losing trade as well. Let's talk about why I took the trade that I took and what kind of mistake that I made, right? At that time, we gap up, and then I'm seeing, okay, we have a one, two, basically one, two, three wedge bottom. Put my enter above this trade, time to 1 to 2 risk reward ratio, the price high, and then put my stop here. It's a reasonable trade, and I think it's a winning strategy as well. But price fail, and then break my stop, and then hit my stop. It is what it is, and then I took a short here after I see three consecutive bear bar closing below this low. But I'm neglecting the fact that we are forming a wedge bottom, and we already in a third push down and testing the bottom of the trend line, and this is extremely dangerous when I try to short below here because it just easily get a bounce, and I should took a buy here instead, right? So you can see I'm selling at the bottom of the channel line, and then this is like a perfect bear trend line as well. And obviously the market algorithm is respecting this line, and this is type of short, even though it's free bear bar close on the slow, but trailing range price session look like a bear leg in the trailing range, and even though we close below here, shorting below here is not a good idea. As I'm neglecting the fact that we have a bear trend line down below, I should take a buy instead, right? So the buy here makes sense, and I switch my bias, and I'm shorting at the lowest, at the support. Basically, you can see that even though we broke below the support, but we have a bear trend line, it's also supported, and this is a potential watch bottom. And then I should probably buy above here, counting 1 to 2 is real ratio, and it will be amazing, beautiful bread and butter trade for me. And yeah, it was. I'm gonna call it a day. Gonna call it a reflection session. I'm gonna review the trade that I took for the past few week. Right? So yeah, shout. What up, YouTube? And I'm going to do a trade recaption for the last week that I trade. And let's talk about the trade that I took, right? So I took a losing trade on I took a losing trade on 20th of January 2026, and I'm going to explain why I took the trade and what is the reasoning why I took the trade, and yeah, basically talk about the trade that I took, right? So you can see that when I came to the market somewhere around here, I was planning to execute a trade here. If this bull bar is not that aggressive, because at that time we have some news event, I'll say something like that, right? And then it just closed at the middle of the range, and I really did not interested about taking the trade that is in the middle of the range. So I dropped that idea, right? And then the next just ranging, right? Just ranging, and then we have four consecutive bull bar close on this high, and then it is at the top of the trend range. So I'm not sure whether it will become a top of the trend range or price will continue pushing up, right? So we need to wait for another bar for confirmation, right? Okay, the next bar is a bull bar, but we have a long tail to the upside, and the next bar we have a terrible follow through, right? So at this time, I'm thinking that probably we are in the trend range, big up, big down, big confusion. So probably I would love to wait for some kind of low to sell setup at the top of the trend range, basically meaning it's a double top, something like that, right? And the next bar is bull bar, right? So I didn't want to take a long there at the time because I was planning to sell, right? Because I'm thinking big up, big down, big conversion, probably we will go to reverse, right? That's my whole idea behind the trade at the time. And then second bull bar is pretty strong because this is one for five consecutive bull bar close on as high, except this bar. So probably we will have a second leg up, right? So we will at least have a second leg up, right? And the next bar is bear bar, and the next bar is bull bar, right? and then it's all right. I'm still planning to take a short instead of long, right? Because this kind of for me is like a bow leg in the training range, right? After breakout is a bear bar. After breakout is a bear bar. So I'm thinking that probably is a bow leg in training range. So I'm do not want to buy high. I want to buy low, sell high, and scalp instead, right? So the next bar is super bear, and then I make my mistake because my mind is always want to short, right? So when I saw a big bear bar, I'm thinking that at that time my idea was okay, it's a big bear bar. So what's the probability that we will have a 1-to-1 risk reward ratio continue pushing down, right? But I was wrong, obviously, because we are technically, if you look at it in this way, right? Technically, we have a bigger training range here. So I'm definitely selling at the middle of the training range because there's the low of the training range, and I do not think it's good way for me to take a short there because it's just too, it's just at the middle of the training range and then testing 20 moving average. But I just took the short at the time and I lose the trade, right? When I look back, I would say this is not particularly a good trade because I was just selling at the middle of the trade range, right? So I lose this trade, and then my initial stop was here, and then I realized that I made a mistake and price was respecting this 20 moving average. So I just exit my trade there at a minor loss, right? And then the next bar, just ranging price action. Definitely we're in the trade range, buy low, sell high, and scalp. Second bull bar, and then bear bar. I don't want to short there because I love to wait for one more bear bar for more confirmation. Next bear bar is weak as well. And then this bear bar, I'm thinking that, okay, we have a double top. We are at the top of the training range. So I'm thinking that probably I would want to take a short here, put my stop above this high and the tightening 1-to-2 risk reward ratio. And the price go to my favor immediately. And I can see that second bear bar. And then price reverse. You can see in the price reverse and then want to go short, want to go low again, and then fail second time. So I just exit all my trade after this high to buy setup, right? So that's my whole trade idea, and yep, this is the losing trade that I took on this date, right? So I know my mistake right now. I'll say this short here makes sense, and this short here is a bit I'll say it's not the best trade definitely, right? Because um, yeah, I'm just selling at the middle of the trade range, and then let's see, right? At least I need to have 1-to-1 risk reward ratio, right? Clearly we do not, so it's not a good trade. Yeah. I'm gonna call it a reflection session for me on Monday, right, 20th January. So ciao. What up? Let's recap the trade I took on Wednesday, 21st of January. So my whole idea was simple. Wait a minute, yep. My whole idea was simple, right? So I'm thinking that at the time here, definitely we are in the trend range, and then we can see that three consecutive bear bar close on the slow. Probably that will be a sign like down, right? But I become a little bit aggressive and I took a buy above this bull bar. I think there's nothing wrong with it because I would say there's at least 40% chance that we will continue pushing up and give me that 1-to-2 risk reward ratio. So I think it's reasonable on the math level, right? So I think I will enter above this bull bar as we're still failing to break below the low of the trend range, and then that's the whole rationale behind the trade. And then you can see enter the trade there, pushing up, pushing up as well, pushing up as well, pushing up as well. And then I would say I exit my trade at break even after I saw this basically two-time price fail to break above this 20 moving average, and then I just exit my trade at break even, want to re-enter again if price are able to retest this low and then give me that another opportunity to continue pushing up, right? That's my whole idea. And I'll just exit at break even and then re-enter the trade again after I saw lower low double bottom being made. But the problem is it's the same problem as I mean, like if I enter here, I put my stop all the way down there, then I would not have enough risk reward ratio for me to take the trade, right? Not even 1-to-2 risk reward ratio. But I think it's still all right. It's still reasonable if I took this buy over here. But I'll say I should not exit my trade at break even and then re-enter the trade again, right? So it's not a bad trade. It's not a terrible trade, but I think it's not the best trade that I can take because if it's somewhere around here, I would say a little bit better, give me a higher risk reward ratio. But here, kind of like not almost middle of the trade range, right? Middle of the trade range somewhere around here. But I think it's reasonable. But definitely not the most ideal trade I can make, right? And the price reverse again, reverse, reverse, and I enter another position here. I'll say this trade definitely should not do that because I'm using limit order, right? There's a way how we can trade the trading range, right? You do not put your stop there for experienced trader, right? They will expect price will not break to the downside that much. They will scale in lower, and then they will get out at the first entry break even, and then the second, third trade a winning trade. But for me, I'm not at that level yet, so I'm still will have a solid stop for myself to really avoid all those big losses, right? And then you can see that price hit just hit my stop and then reverse afterward, right? You can see that it's just a fake out and then reverse afterward. I would say this trade here makes sense to me. And this trade here is not the best, but it's still reasonable. At least we'll have a 1-to-1 risk reward ratio. But this trade to me is a bit I'll say it's reasonable, right? Using limit order buying at the low, but but you have to willing to scale in lower in order for you to have a um good win rate strategy, right? Also, you need to use a smaller loss. You need to use a smaller lot size because you will scale in lower. You're using a wide stop, right? So, but that's not the way that I trade. So, I think this trade should not do that, and I'm using a bit higher risk in this trade as well. So, it's a losing trade for me. The buy here makes sense. The buy here is reasonable, but it's not ideal. The buy here is makes sense as well as we're in the trading range, buy low, sell, and scalp. But I should not just that easy to get fake out, right? I should maybe hold one more bar to see whether the next bar is a bear bar as well. But at the time, I'm using too much risk, and I cannot do that. If it really breaks to the downside, then probably I'll lose a lot of money, right? So that's something that I need to learn when trading. In trading range, I would say experienced trader, they will use the white stop, and then they will see whether the bear breakout is successful or not. 80% of the time, the bear breakout will not be successful, and then when we first all the way back up, but I put my stop there, and then price just hit my stop and then continue reverse, right? So I think the problem that I make here is the first trade makes sense, the second trade makes sense as well. The third trade, I'm using too high of a risk, and I'm not willing to scale in lower to for scalp, right? If I buy here and I'm able to scale in lower for scalp, then I will have a then my first trade can get out at break even, and my second trade can get out at a win, right? This is what experienced traders do. But at this moment, I'm not willing to do that because it can very easily lose very big if I'm not using a correct possession, right? So, yep, what it is, the first trade makes sense to me. The second trade makes sense to me either, but it's less ideal. The third trade, honestly, is reasonable, but I have to be willing to use the Y stop and scale in lower in order to take some limit order trade like this, right? So I'm gonna call it a day and call it a reflection session for me. To be honest, nothing to recap, just ranging, and I'm just gonna call it a reflection session on that day on gold, right? What up? This is the second trade I took on that day, and this is 21st of January, and this is like US 500. Let's talk about the trade I took, right? I'm trading at the market open somewhere around here, I'll say. This market open, 9:30. I wanted to convert it to Hong Kong time, not gonna lie, because I'm based in Hong Kong. And here is okay already, 12. All right, this is already the midnight. I would say I'm trading somewhere around here, and then price continue pushing up because this gap up. I'm trading SPX, so it's gap up. I do not want to do anything. Continue pushing up, and then what it is. And then price first time break below the tight bull trend channel, probably going to be minor. And then this offer a high one by setup, high two by setup. And then price still fail to resume the trend. And then this big, this bear bar. And then this is a really big, strong bear bar to me. And I'm thinking that, okay, we close below moving average, high two, buy setup failed twice. And then we're breaking below the channel line, the moving average, the low of the past freaking 15 bar, a strongest bear bar, and then we also around the previous high as well. So what's the probability that price will give me that one-to-one risk reward ratio continue pushing down? So I think the chance is very high, and this is my bread and butter trade. You can see that. Enter trade there, and then just win, right? Just win easily, right? So yep, one-to-one risk reward ratio, very easy trade. This is my bread and butter trade. This is breakout trade. 60% chance that market will continue pushing down with one-to-one risk reward ratio. I will be a profitable trader and I will have edge in this kind of trade, right? So I'm going to post the video and ciao. What up, everybody? Today is 20. No, today I'm going to do a reflection for my trade that I took on 22 of January 2026. And then let's talk about the trade that I took, right? So I took the trade, okay, above this bull bar because I'm thinking that big up, big down, big conviction. We're in the trading range and this is near the bottom of the trading range. I'm thinking that I'm becoming a little bit aggressive here because 1, 2, 3, 4, 5, 6, 7 bear bar probably will have a side leg down, right? So I've become a little bit aggressive this trade, just like the trade that I took on 21st January 2026, right? But I think it's reasonable trade, but definitely it's not a high probability trade. So basically, I'm aiming like 1 to 2 ratio, something like that, right? I would say my initial stop definitely is here and then yeah, something like that, right? Boom, boom, boom. Three consecutive bull bar look good to me at the time, but this one bear bar, I changed my mind because probably we're in the top of the trend range, and then in the trend range, what should we do? We probably should buy those sell high and scalp, right? So I exit my trade below there with a small win, I would say, below this low of this bear bar, right? With a small win, and then price test the bottom of the trend range again with a bull body. You can see that, and then this is the same trade idea here, right? First leg, second leg down. First leg, second leg down probably is a second leg trap. And also we can see that long tail to bottom overlapping bear bar probably is not the start of a strong bear trend. It's look like a bear leg in the trend range to me than a start of a strong bear trend, right? And then especially the follow through bar is a bull bar, and then this is like micro double bottom here as well. So I enter my trade above this high and then targeting two times of the risk reward ratio around top of the high as well, right? So you can see this trade I may execute amazingly, right? You can see that price broke to the upside with one, two, three consecutive bull bar, but this is a long way to tell. It is what it is. It's still a very strong bullish momentum to the upside. And then the next bar closed bullish, the follow through closed bullish as well, meaning that the bullish momentum is still very strong, and then probably will have a measure move up, right? The measure move up can be either the height of the trend range, one time of the trend range, or even this bull leg, right? You can see that basically the same thing, right? And yep, I'm gonna delete that as well. But at that time, I'm a little bit concerned or cautious about it because we have one, two, and then fail to close above this high. To me, it looked like an early stage of a trend range, right? And then a bear bar, and then a bull bar, and then this is like I exit my trade everything below here because I'm thinking that probably we're in a trend range, and then I want to secure my profit as I'm already up, 1 to 2 ratio. But at that time, I made a silly mistake because I'm trading funding account on the funding pip, and they basically do not allow you to open a trade 5 minutes before or 5 minutes after. There's a high impact news on factory, but at the time I do not know about it, and I just exit my trade there just right after the red for the news. So the profit that I made from this trade didn't count on my funding account. I make 300 something dollar just based on this trade alone, but I didn't the trade didn't count and was deducted from my account. It's the mistake that I learned and just move on, right? So it's okay. As I'm taking a very good trade. You can see that second leg trap with a micro double bottom at the bottom of the trade range. At least 40% chance that we will have us push up, right? So I just took the trade. And I'll say, what should I do better? Is probably I should re-enter above this trade or wait for price to break above this high and continue re-enter the trade, right? This is something that I could learn, right? Buying above this bar, I would say, it's a bit tricky for me. I do not want to buy above this bar, but definitely I would love to buy above this bar, right? This is probably we will have what's the probability that we will what's the probability that we will have a you know there's definitely 60% chance that we'll reach the measure move target before we pushing down, right? So that's the whole idea, right? Definitely I can enter this bar as we close above the prior high, right? So yeah, we can see that there's some reaction there as well. You can see that price continue pushing up. And one more, things is you can see that I, you know, dread the measure move for the trend range, and then you can see very amazing reaction there, right? Price just basically stalling out at the measure move target and then retest the moving average. I would say buying above here also make perfect sense to me. Targeting at least 1 to 2 ratio is also makes sense. But at the time, because I was going to sleep, I'll say, right? So, yep, you can see just amazing price action. You can see the price just really stall out at the measurement target, right? You can see that. So yeah, amazing trade there. Buying at the lowest, price of the day, and exit there. Miss all the trade here, but it was still a learning experience for me. I would say I can re-enter here. easily, right? Put my stop 1-to-1 restore ratio and then let the trade run. But nevertheless, still a learning lesson for me. I think it's a good trade that I took. And yeah, you can see that just buy the bull close, right? Very easy trade. Buy the close bullish trend. And then this is the recap for me for today. So I'm gonna call it a day. Okay, I milled it, but basically what I just talked about is basically I took the trade based on SPX because it has opening and close of the market, right? So I trade based on that, and let's look about the trade that I took. Basically, I'm taking the trade here, I would say. Basically, we gap up and then price we trace to the 20 moving average with one, two, basically one, two, three, like a wedge bottom to me. And I'm expecting price will respect this 20 moving average, and I just put my stop below here and then targeting, 1-to-2 ratio. And I just hit my, target, right? Very easy trade. That's it. Simple. Gap up, and then the common setup that when price gap up is we wait for some kind of double bottom or wash bottom to a moving average, right? You can see that 1, 2, 3. It's not the strongest bar, but definitely here make more sense. This is high two buy setup and then pull my stop here. Targeting 1-to-2 risk reward ratio will be very, very positive winning strategy, right? That's the whole idea why I took the trade. That's it. I'm gonna call it a day and I'm going to talk about the trade that I took on Friday, right? Oh, basically I can open my account to talk about it. Wait a minute. Well, let's quickly go through the trade that I took on Friday. Basically, my trade that I took on Friday, and my trade is still opening, and then probably tomorrow I will close my trade right after the market open, and then secure the trade there, right? So let's talk about the trade that I took. Very easy, very simple trade as well, and I'm going to quickly go through it, and it's very simple trade. We're in a trading range, right? Obviously, you can see that we're in the trading range, and then what should we do in trading range? Buy, low, sell, and scalp, right? So I enter trade basically here, I would say. This is the top of the trading range, somewhere around here. Here, somewhere around here, top of the trading range. You can see here the top of the trading range, and now I saw, this bull leg probably is not. Wait a minute. Here probably is not. Here probably is not the start of the strong bull trend, three consecutive bull bar, followed by three consecutive bear bar, bull breakout, followed by bear bar, bull breakout, followed by bear bar, overlapping bar, breakout, bear bar. There's low one short, and then I just enter with a low to short with three consecutive bear bar close on the slow, right? Two consecutive bear bar close on the slow, and I enter here, put my stop here, and then targeting the low 1-to-2 ratio. That's it. That's how simple my trading is, right? So I'm gonna call it a day, and hopefully I'm going to basically tomorrow close this trade at profit and then just get my another payout, right? So right now, wait a minute, I'm gonna show you something. What up? You can see that this is my client portal of FTMO. You can see that I've trading this account since I would say October, something like that, and then I mean my first payout, second payout, third payout, fourth payout, and the upcoming fifth payout, right? You can see that I can basically keep my account for more than 3 months, right? October, November, December, January, right? 3 months, right? It's not easy task, right? Without blowing the account, I'll say definitely there's some consistency and luck involved, but definitely I'm gonna keep trading the account and then to really, really, really master the skill of trading. And yeah, that's it. And currently I'm taking the Fiverr 50K account challenge, and I'm up right now 3%. Yeah, everything is good, and I'm gonna call it a reflection for myself, right? So, yeah, I'm just call it a day, and yeah.